Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here's your weekly technical analysis of New York and London coffee markets. I'll start with New York coffee. The false break higher back in late August over the top of the diamond pattern, which I highlighted in blue on the daily chart above, formed over November 2021 to July 2022, started to move, admittedly initially in the wrong direction at the time, that has eventually led us to where we are now today. The pipe top formed on 9th and 12th of September were the actual direct triggers for the start lower. The actual pattern, the lopsided diamond, is huge. I had in my previous commentary given a primary target X in the 166 3/4 area, whilst a secondary harder to achieve target X1 would be in the 142.40 area. What's interesting is that last week target X1 was below the bottom of my daily chart. Today it is not. I said at the time, and I quote, "Needless to say, given the size of the lopsided diamond pattern, these proposed targets below, assuming the break lower holds, are some longer term targets." I also end a quote, and I also continue, and again I quote, "There is one other fly in the ointment. Perhaps, just perhaps, this lopsided diamond pattern is becoming a big bear channel." If that is to be the case, then the first area to look at below would be the lower bear channel line of such a pattern. That's currently actually at 172.5. That's the end of the quotations. The extension of the bear channel you can see highlighted in green. The lower bear channel line, though breached last week and the week before, was only really broken after numerous attempts back that went to the third level of indecision, with a second consecutive close below only made 3 Fridays ago. In part, this was due to support from the 50% Fibonacci line, the May 2019 to February 2022 move at 174 even, but I expect more so from the neckline highlighted in red below of the January 2020 to April 2021 reverse head and shoulders bottom, currently at 167.30. It was only on Monday 2 weeks ago that prices finally smashed down through the primary target for the diamond pattern at 166 3/4, and last week we started to see some stabilization below the neckline. However, the support at 153.30 dating from May and June 2021 has triggered what may be a key reversal up today. That may close back up over the 2017 high at 159.30, so the move lower they're not all uniform or smooth. It may just be the case of 2 or 3 steps down followed by 1 step up. We shall see. Anyway, look now below the support at 153.30, as the next support is the last one before target X1. That support is the August 2017 high at 147 1/4. The only feature to watch out for is looking to see if prices continue to stay below the nearby neckline. London coffee. There were 2 key relevant features here in the recent past in relation to the fall in this market. First was early on. It was the early August until late September type of head and shoulders pattern. The neckline highlighted in green was breached and then properly broken, and since then the market has broken down through the following: all the remaining moving averages. The 50% Fibonacci line of the August to December 2021 move at 2064. The middle time currently at 2009, which is highlighted in blue on the daily chart, of the late December 2021 to mid-July 2022 bearish Andrews pitchfork. Remember that one, that's going to come back again, that pitchfork. The significant congestion zone split into a number of individual bands, that is between 1968 to 2004. Congestion at 1945, the 2018 high at 1845, and finally slowing down at the 50% Fibonacci line of October 2020 to December 2021 move at 1812, and last week stopping at the lower time, currently 1765, of the earlier mentioned, I said it would come again, the earlier mentioned late December 2021 to mid-July 2022 bearish Andrews pitchfork. Last Thursday we had a combined key reversal up and bullish engulfing pattern that was based on this lower time, highlighted in blue. So what now? Well, as I stated last week, and I quote, it seems that we had 2, maybe 3 possible avenues. First was to look at the 50% Fibonacci line at 1812 and the nearby lower time as the end of the current move lower. leading to some possible consolidation before a possible attempt up towards the congestion overhead starting at 1945. Alternatively, it could be that we are seeing some consolidation here, even possibly as high as 1945 area, before the market again turns around back down with a possible bear flag type pattern, and with potential down to possibly as far as the 1670 zone. This is by no means a done deal, but it's worth considering. There was a third solution, and it only started to become considered because of the specific actions made 2 weeks ago, which actually now 3 weeks ago. Made 2 weeks ago. It was to consider, just consider mind you, that we're making a nascent possible diamond pattern. Well, this week, this last idea I have rejected, but the other two avenues, the first two avenues, well, they're still on the block. But I think the market still hasn't made up its mind on which it may wish to follow. End of quote. The situation has not changed that much since then. Yes, we are lower, but we are still seeming to be consolidating, and the question as to whether this is a temporary or not, or is it a change in trend, is still open. However, I would like to point out two potential impactful factors that are rapidly approaching the market from below. They're highlighted in pink, and they are the January 2021 to date uptrend currently at 1721, and the October 2020 to date uptrend currently at 1712. By the end of December, they will mix in with the congestion zone 1740 to 1746 that contains the August 2021 low at 1743, which may make for an interesting time, as also the lower time will be down there by then as well. Thank you for listening. This weekly broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final bit.